Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be going through our live rates. Then, we're going to be talking about profit and loss loans. Give us just a moment here to go live on all the different platforms. We got the chat up on the screen. Feel free to drop a comment there in the chat. A great topic here for today. We also talked about it on one of our trainings here this week, our nighttime training. So, great loan type to go over here. So it looks like we're live on all the different platforms. We'll go ahead and get it started here. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. Drop any questions you have in the chat as well, and we can answer your questions after we go through the presentation here. Okay, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live rates. Then we do a deep dive into a different loan type, and today's loan topic is going to be profit and loss statement loans. So great topic here for today to get into, but we'll get into that shortly here. What we'll do first is go through today's actual live mortgage rates. So Nick, if you're ready, let's go ahead and see what the rates are looking like today.
All right. So before we check that out, let me explain the scenario that we'll set up here. We'll set up a basic loan scenario to compare the APR across all of the programs for today. It is September 4th, just after 11 a.m. Eastern. So all the initial rate sheets are live for our standard programs here. If you'd like a full itemized loan estimate that itemizes all the fees that go into the APR, please get with one of our team members. We have over 300 loan officers to help you out. For the demo today, as we do every day, we'll set up that standard scenario of a single family home, 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan, 20% down payment. We'll set an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with those settings, let's check out the rates today. So first up is our 30-year fixed conventional, which is what most people think of when they think of a standard mortgage for a primary home. Rates as low as 5.875 today. Final APR 6.195, and that's the lowest it's been in quite a while. Definitely good to see the rates continue to stay down. And if for any reason our customer doesn't qualify for conventional, typically the next option we want to quote is an FHA. FHA allows more leniency on credit issues and a much higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. FHA comes in today, 5.125 rate, final APR 6.064. So if our customer qualifies for both, they may want to consider FHA if they're willing to do the mortgage insurance. But our customers that need to use FHA, definitely a great option, very comparable, and in some cases might be a touch cheaper. And moving on to our VA, it's only for our eligible vets and active service members. If you are eligible, these programs are amazing. Rates today coming in at 5.25. Final APR with a standard funding fee, 5.542. So notice if our customer qualifies for VA, it's going to be much cheaper than FHA or conventional when we compare the APR across the programs. So definitely take advantage. And moving down here, good to see some fours on the table here. That's awesome. Been a long time since we've seen some fours. Our final standard option, 30-year fixed USDA. USDA is only eligible for USDA eligible area properties, which is the rural areas of the country. If the property is eligible and the borrower is eligible, this is a good option to consider. Rates today, amazing 4.99. Final APR with all the fees included, 5.728. So notice if our customer qualifies and the property qualifies for USDA, they'll be comparing to an FHA, and it's a touch cheaper. So definitely a good option to consider. And it's cheaper than conventional as well when you're comparing across the program. So good option for those properties in those areas. And that rounds out the standard options. If the customer doesn't qualify for any of those options, many other banks or lenders would have to deny them, but that's where we love to present our 5,000 other options, starting with our 30-year fixed non-QM alt doc option for a primary home. This is an option for our customers to use bank statements, 1099s, PNL, today's topic, or similar. So if our customer doesn't qualify with standard tax returns, etc., needs to use alternative docs, they'll switch from a standard conventional to the non-QM alt doc. Rates as low as 6.25. Final APR 6.578. So notice when we compare the APR across the programs, we're within, well within a half a point today actually on our bank statement or similar. So great option for our customers that need to switch. Not much difference there, and we can still make their home happen. And our investment properties, tons of flexibility here. 30-year fixed non-QM alt doc for investment. So again, bank statement, PNL or similar. This option is probably bank statement, 6.75 rate. Final APR 7.080. And we'll compare that to our other investment options down here. First up is our conventional. Remember, there are no government options, so no VA, USDA, or FHA. But we do have our 30-year fixed conventional coming in today at 6.5 rate. Final APR 6.838. That definitely dropped a little bit from the last few days. That's amazing. So a little cheaper than our alt doc option, but still not quite cheaper than our favorite option, our DSCR. DSCR stands for debt service coverage ratio. No income needed, no employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents can cover the estimated expenses, aka the property will cash flow. That's a ratio of 1 or higher, which is preferred. And for the demos, we put a ratio of 1.5 so we can see all of the options pop up here. First up, our 3-year prepayment penalty option. Rates as low as 6.5, final APR 6.785, just a touch cheaper than conventional, almost the same. But we do have our 5-year prepay option, which actually beats conventional, which is still amazing. A rate at 6.375, final APR 6.682. Again, edges out conventional a touch, which is pretty amazing. And the final DSCR option, no prepayment penalty. So some states don't allow it. Some investors don't want it, no problem. This obviously changed a lot since yesterday as well. Our 30-year fixed DSCR with no prepayment coming in today at 6.75. That's amazing. Final APR 7.080. So pretty comparable to conventional here, just a touch higher, which is typical for DSCR. And if our investors can add a prepayment penalty, they can make it even better. So great options there for DSCR. And the final 2 demos we do every day. Our 30-year fixed second mortgage is very popular these days, as many customers have a low rate first mortgage, and still need some cash out, and may not want to get a HELOC. HELOCs are a little higher rate and obviously variable. These are fixed rate second mortgages for a primary home. Rates as low as 8.375, final APR 8.786. Definitely lower rates than a HELOC, and obviously not adjustable. And same program for our investors, for investment properties, can get cash out. Rates as low as 9.75, final APR 9.995 to get that cash out with a second mortgage without touching that first. And these are non-QM programs, so we can use bank statements, 1099s, and our topic for today, PNLs are actually eligible for that program as well. But let's go ahead and talk about our general PNL program. So that's a category under our non-QM alt doc, right? It's a very specific category and for a specific reason. Typically the bank statement's the most common, but PNLs are definitely coming up there as one of the most popular options because they're a little more flexible. So Jose, first explain why we would use the PNL, and let's check out some live rates.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. The PNL is one of our alt doc programs specifically for self-employed borrowers only. Now, I will state with the PNL program that we have, you are able to combine other income types like W-2 income, actually bank statement income from if they have other businesses that they may qualify with under banks with bank statements separate from the PNL. Would have to be 2 totally separate businesses. So it is a very flexible program to allow to meet the needs of the investors or should I say the borrowers, in this case, self-employed borrowers that may have issues either not claiming enough or maybe too many expenses or write-offs on their business, on their tax returns. So they may not be able to qualify traditional full doc, or maybe you reviewed their bank statements and realized that they may have issues with the bank statements like too many NSFs, overdrafts, declining deposit trends, or negative or low ending balances or unverifiable large deposits that cannot be verified as being business related income. Any of those issues in your file the P&L would be a great workaround solution for those. So as always, though, remember it is self-employed borrowers only. We do have options for self-prepared P&Ls and options for the P&L prepared by their tax preparer, accountant, or CPA, whichever of the three they may be. They're all acceptable. So let's get into the options I have for you today. Our first option is at the 90% max loan to value. As always, never any mortgage insurance applicable for any non-QM loans, regardless of the loan to value. This case, our primary 90% LTV, 10% down. Our lowest cost option, 9.374 at par, and you can buy that down to 8.124 at a cost of 2.375 points. And this is for our primary 1-unit purchase, 90% LTV. Our highest LTV investment purchase is 85%. This is the max for this product as an investment property. And our lowest cost option is 8.374 at par. And we can buy that down all the way to 6.999 at a cost of 3.375 points. Excuse me a second. Don't know what's going on here. Let me share my screen again. And for our low credit score borrowers, 600 credit score is our lowest credit score for this option. And 80% LTV is the max LTV for that option. And we're looking at 8.374 is our lowest cost option at par. And we can buy that down to 6.999. And actually, that's a typo, folks. Sorry about that. That is not correct. So our profit and loss 1-unit primary cash out refi, 80% LTV is the max LTV. For this program as a cash out refi, 7.75 is our lowest cost option at a cost of 0.25 points. And you can buy that down to 6.75 at a cost of 2.375 points. And this is our primary cash out refi at 80%. Our investment cash out refi, also 80% LTV, which is great news. And our lowest cost option is 7.874 at par. And you can buy that down to 6.874 at a cost of 3 points. And for our low credit score borrowers, this one is for the cash out refi. 75% LTV is the max LTV at a 600 credit score for a cash out refi. And you're looking at 11.25 is our lowest cost option at a cost of 1/4 point. And you can buy that down all the way to 9.875 at a cost of 3.375 points. And for our 600 credit score purchase option, it is 80% max LTV with similar rates as what you see right here. So do look to the mortgage calculator for your P&L loans, as well as any of your agency and non-QM options as well.
All right. Thank you, Jose. I don't actually see any questions, so I think we can go ahead and wrap it up here. But remember, we do this show at 11 a.m. Eastern. Excuse me. We do this show at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different loan type. So we will have a new loan type for you tomorrow. We'll see you all tomorrow at 11.